Hello everyone. In this video, let me give you a clarity on derivatives. So this is a topic which comes in investment banking in finance domain. So what does this derivatives means? It's a contract between two parties which derives its value or price from underlying asset. So let's go about more information on these derivatives. So what we'll be covering is a brief introduction about this part and exchange traded versus over the counter market, forward contract, future contract, and margin call, short selling. So a lot of topics we'll be going to cover here: credit default swaps, interest rate swaps. So this is a learning material which I've received uh, before. So I'm just giving you an overview about it so that you will get a brief understanding, especially freshers who are interested in working in investment banking department. So financial instrument whose value depends upon value of other underlying variables, or it will derive its value from underlying asset. This underlying asset, what it can be, like it can be a stock, bonds, interest rates, or currencies. Settlement at a predetermined future date. The important tool for risk management, like lock in the prices, hedge against unfavorable movement in rates, and diversifying the portfolio. And it's complicated to understand, and the chances of the counterparty default is in OTC derivatives. So if you even search in LinkedIn also, you will get this, whoever hires for this department, or if not, like what is the scope in this field. So we have even like a similar keyword called corporate actions as well, which comes in investment banking. So what are the types which comes under this derivatives? Future contract, forward contract, options, put and call, swaps, interest rate and credit default swaps. Exchange traded versus over the counter markets. What does exchange traded means? Market where individuals trade standardized contract defined by the exchange. Over the counter. So that means O2C full form, over the counter. See, in accounts also we have O2C or OTC or O2C. They usually put it up in various platform, but people mistake it as it's uh, like they get confused both the departments. So over O2C means either it can be order to cash, which comes in accounts receivable, and this OTC is over the counter exchange. Telephonic and computerized network of dealers. Trades are done over the phone between two financial institutions or between financial institution and one of the client. In O2C, terms of contracts are not specified by the exchange. Market participants can negotiate freely any attractive deal. Some amount of credit risk in OTC. Forward contracts versus future contracts. So there are some examples which are given here, like what does this forward contract goes on. So you will get a clarity if you are able to get this, if you are able to view this particular information. And later part, they have mentioned the real life example to understand forward contract. So forward contract is an agreement between two parties to buy or sell an asset on a certain future date or future time for a certain price. Long position in a forward contract. Party that will agree to buy the underlying asset on a certain future date for a specific price. Short position in a forward contract. The other party that agrees to sell the asset on the same date for same price. What does this customized contract based on requirement of all the individual parties. It's used by the institutional investors. Settlement date can be any future date as agreed by the parties. Future contract. So the agreement between the two parties, either selling an asset or purchasing on a certain future date or future time for a certain price. Long position in future contract. Party that will agree to buy the underlying asset on a certain future date for a specific price. Short position in a future contract. The other party that agrees to sell the asset on the same date for same price. So there are even differentiation which is given. So forward contract it's OTC traded, future contract is exchange traded. And in here in forward contract, no collateral is required. And in future contract, initial payment or margin is required. I hope collateral people knows it's assets which is pledged as a security. And mark to market initial margin and maintenance margin. So this will be helpful, especially if you have studied investment banking course or anything in Imarticus, or it might be if you are into the same field. So you will get more clarity on it. I'm not sure if these kind of topics are covered in colleges, but it will be helpful. Even fund accounting also there is a particular topic in investment banking. So even those people it will really help you in order if you are go in deep you will get to know what does this derivative means. So they have even mentioned about this short selling. So it involves borrowing shares or securities from a brokerage firm, selling them in a market and repurchasing them at a lower price later to repay the amount borrowed. The initial amount and the pocket in the difference as a profit. Call option. Options are financial derivatives that give buyers the right but not the obligation to buy or sell an underlying asset at an agreed upon price and date. And call option is a contract between two parties to exchange a stock at a certain price by a predetermined date. The date specified in the contract is known as expiration date or maturity date. The price which is mentioned in the contract is called strike price or exercise price. I'm repeating again about the meaning of derivative. It's a contract between both the parties which derives its price from underlying asset or if not value. So various learning material, if it is made in different topics, for example, in various finance department, it will really help and it usually passes on to different set of people. Let's hope like we'll get such kind of valuable information which can be benefited to a lot of people who are willing to learn or who want to clear the interview in case if the JD mentions and if they are looking for a relevant experience. If the HR, there are situations even the HR will ask like whether do you know what is put option or what exactly the based on the keyword. In case if you are aware about the topic and if you are able to understand it, it will be easier for you to get a chance to get selected. So this PDF has literally 37 pages. So in case if you need this PDF, do let me know if you are so that I can forward it to your mail ID. You get utilized, learn, and try to make sure that you are able to get each and every concept which comes in IB domain or investment banking domain in the money, at the money, and out of money options. At the money option, when the strike price is available for the rate going on, in the money option, the strike price in which the option will be certainly exercised, considering the current market price called ITM options. Out of money option, option on strike price, which will certainly not be exercised, taking based on the current market price. A call option is a money if the strike price is lesser than the current market price, and out of money if strike price is more than the current market price. Interpretation of option change from NSE site. And swaps. So swap is a over the counter agreement between two companies to exchange cash flows in future. The agreement defines the dates when the cash flows are to be paid and the way in which they are calculated, which will be calculated. A forward contract can be viewed as a simple example of a swap, whereas a forward contract is equivalent to the exchange of cash flows on just one future date, and the swaps lead to cash flow exchange on several future dates. And the different types of swaps: credit default swaps and interest rate swaps. What does interest rate swaps means? So it is a forward contract in which one stream of future interest payments is exchanged for another based on a specified principal amount. They have explained about the credit default swaps, derivative contract between two counterparties, protection buyer and seller. Credit default swaps. So these kind of learning material even you'll be able to see internally in the company as well once you go in the organization. So, but you'll be not able to forward it to your personal mail ID. But whenever you, if you have a time, you can go through a lot of learning material which comes in between twice a month or thrice a month. So you'll get a lot of information on risk management or KYC, ML, or anything related to core finance. So I hope you like this particular PDF. It really helps a lot of freshers who might be interested to learn something new. And I have given certain information by just covering up on this video. So in case if you like this video, just try to share it to any of your friends who are interested to know more about investment banking department or want to get into this field, as the market is a little, it's very difficult currently to get a job, but at least if you are able to get some learning out of some basic concepts which are available outside, it will be really helpful in order to gain your overall knowledge. And even you can add a sentence in the resume as well that these kind of knowledge I'm aware, in case if you are a fresher. The more you add certain keywords it as a fresher, it will really help in order to get when they are sourcing the profile via Naukri. Thanks for watching this video. In case if I get to know any other topics which is very much useful, it can be a learning material or it can be a tips, career tips, or anything like that, it will really help. And I have also shared the video in a separate this how to edit a resume and how to draft a mail to the HR people. Do check. It's a basic thing. And in case if you are new to LinkedIn, just there is one more video in this same channel like how to draft a mail to how to use LinkedIn or what are the columns which has to be mentioned. It will really help. The unless and until if your profile is not updated, it is it's no use of pinging the people in LinkedIn chat. And some other person will definitely try to respond and they can get to know about your overall experience or which year you have passed out on your profile. And I've seen even people trying to update, they don't update their when they left the previous firm. So these are all important once you are looking for a job. If not, people will not have clarity that you are a immediate joiner. Thank you everyone.